Welcome to El Oraculo Cifrado, the channel where we decode the financial secrets and cryptocurrency insights that the establishment wants to keep hidden. Today we are diving deep into Bitcoin. Wait. Before you close this video, I need you to listen carefully. There is data on the Bitcoin blockchain, public data, that most investors never check, and that data is telling a very different story from the one you see in the headlines. Today we are going to decode it together. In April 2024, Bitcoin's fourth halving occurred. The block mining reward was cut in half, from 6.25 to 3.125 Bitcoin. Historically, between 12 and 18 months after each halving, Bitcoin has reached new all-time highs. That puts us exactly in the 2026 window. This is not opinion, it's data. Pay close attention because here is the promise of this video. I'm going to show you 3 categories of data that major financial media completely ignore. First, the on-chain data revealing whale behavior. Second, the macroeconomic cycles aligning in 2026. Third, the institutional metrics indicating massive silent accumulation. On-chain data doesn't lie. Bitcoin addresses holding more than 1,000 BTC, known as whales, have been steadily increasing their positions since late 2024. Glassnode reports that wallets holding more than 10,000 BTC are at their highest accumulation. Larry Fink, the man who runs BlackRock, the world's largest asset manager with over $10 trillion under management, publicly stated that Bitcoin is a legitimate store of value asset. But words don't matter, facts do. BlackRock's Bitcoin ETF accumulated more than $17 billion in its first year. That is pure institutional conviction. Before we continue, I need to show you something almost nobody is connecting. The Federal Reserve's interest rate cycle, global inflation, and Bitcoin's halving cycle all converge at the same point in 2026. The last time these 3 factors, Michael Saylor, the founder of MicroStrategy, a stocky bald man known for his absolute conviction in Bitcoin, has turned his company into the largest corporate holder of Bitcoin in the world. Throughout 2024 and 2025 he kept buying aggressively. His thesis is simple but powerful: Bitcoin is the best performing asset of the last decade and will remain so in 2026. The stock-to-flow model was widely criticized when Bitcoin didn't follow its curve exactly. But here's something interesting: after each halving the model has regained relevance with a lag of 12 to 18 months. After the April 2024 halving, that lag takes us directly into the second half of 2025 and all through 2026. The model's critics simply forgot the calendar. El Salvador was the first. But in 2025, other countries began exploring national strategic Bitcoin reserves. The United States, under a new crypto-friendly administration, started seriously debating a strategic Bitcoin reserve. Only 21 million Bitcoin will ever exist. Ever. But here is the mind-freezing fact: an estimated 3.7 to 4 million Bitcoin are already lost forever, in forgotten wallets, destroyed hard drives, and lost private keys. That means the real circulating supply is significantly smaller. The actual scarcity already exceeds the programmed scarcity. Here comes the pattern interrupt you need to process. Bitcoin ETFs approved in the United States are buying more Bitcoin every day than miners can produce. After the halving, miners produce approximately 450 Bitcoin daily. Institutional ETFs are demanding between 2,000 and 5,000 Bitcoin daily. This is a silent supply crisis quietly unfolding right now. This video is possible thanks to Binance. Compra Bitcoin send commissions. Link in description. Elon Musk, the tall, lean man with short brown hair known for his irreverent confidence, has sent mixed signals about Bitcoin for years. But what matters is not his tweets. Tesla still holds Bitcoin on its balance sheet, and so does SpaceX. When the world's most valuable tech assets hold Bitcoin, the institutional message is louder than any public statement. China officially banned Bitcoin. But on-chain data reveals that Chinese hash rate still accounts for 20 to 25% of global mining. A completely underground Bitcoin economy is operating out of Asia. On top of that, Chinese capital is flowing into Bitcoin through OTC markets to hedge against yuan devaluation. The ban didn't kill demand, it just hit it. Here are the 4 on-chain signals you must monitor in 2026. Number 1, an MVRV ratio above 3.5 signals extreme overbought conditions. Number 2, a futures funding rate above 0.1% daily signals dangerous euphoria. Number 3, the spent output profit ratio at all-time highs signals mass distribution. We would be irresponsible if we didn't talk about the real risks. Governments can regulate more aggressively, a deep global recession could temporarily collapse all risk assets, and a massive exchange hack could trigger panic selling. Bitcoin can fall 60% before rising 400%. This is not for money you need tomorrow. It is for patient, strategic capital only. The rule used by the world's most sophisticated wealth managers is this. Between 1 and 5% of your total portfolio in Bitcoin gives you upside exposure without destroying your wealth if things go wrong. 1% is for informed skeptics. 5% is for those convinced by the data. More than 5% is speculation, not strategic investment. Let's review the complete post-halving track record. After the 2012 halving, Bitcoin rose 9,000% in 12 months. After the 2016 halving, it rose 3,000% in 18 months. After the 2020 halving, it rose 700% in 12 months. Returns shrink with each cycle as the market matures. The data is converging at a point you cannot ignore. A recent halving, unprecedented institutional demand, exchange supply at historic lows, nations accumulating as a strategic reserve, and aligned macroeconomic cycles. I'm not telling you Bitcoin will hit $500,000. I'm telling you the data suggests 2026 could be the last year to accumulate before the next major move. Here's what I'm asking you to do right now. First, save this video because you will want to revisit it in 2026. Second, subscribe to the Cypher Oracle because in upcoming videos we will go deeper into each of these data points. Third, share this with someone who still thinks Bitcoin is just a fad. The data is public, but the interpretation is what has real value. At the Cypher Oracle we don't tell you what to think, we give you the data so you can think better. Bitcoin in 2026 is not a promise, it is a thesis backed by on-chain metrics, institutional behavior, historical cycles, and macroeconomic fundamentals. The question is not whether Bitcoin will still exist in 2026. The question is whether you will have made an informed decision before that moment arrives. Subscribe to the channel and ring the bell to never miss a video. Every week we publish information that can change your financial future.